Hi, thanks so much for tuning in. You're watching BQ Prime, and this is the Mutual Fund Show. My name is Mathew. Now, every week we pick a topic that we feel is going to be insightful in your journey towards investing. We try and help you make the decisions that hold you in good stead over the long term. Now, this time around, we'll be focusing on a report that is released every quarter by CRISIL. It's called the CRISIL Mutual Fund Ranking Report. And as the name suggests, it takes a look at mutual funds across various categories and ranks them according to certain parameters that are pre-decided. We'll discuss what these rankings are for the quarter gone by. We'll discuss the methodology, and we'll also speak to a planner to understand whether this is the only aspect to bear in mind or what else she takes into account when she advises her clients, and that should help you make your decisions as well. Joining me to talk about all of this and more are Piyush Gupta, who's the Director of Funds Research at CRISIL Market Intelligence and Analytics, and we've got Prableen Bajpai, who's the founder of FinFix. Thank you so much for taking the time, both of you, and good evening to the both of you. Piyush, I'll start with you very quickly. Can you take us through the methodology that you follow in the making of this report?
Right. So I think this is a quantitative assessment where we look at performance and portfolio-based parameters. So it's a combination of performance assessment as well as how the portfolios are stacked up at a given point in time. First step, of course, is shortlisting of mutual funds. There are two primary criteria. One is the fund needs to have a performance track record. So when I look at equity fund, we look at least 3 years of performance track record. Second is the assets under management, and we have a lower cutoff of 10 crores the fund needs to have before it becomes part of the ranking universe. In terms of the parameters, there are multiple parameters we look at. First set of parameters are NAV or performance-based parameters, which looks at return and volatility. We look at rolling return to measure the performance, and volatility of the same returns is considered as part of the ranking. On the portfolio-based parameters, we look at the extent of diversification of the portfolio of the funds, both at the company as well as sector level. We also look at the liquidity of the underlying portfolios, where we look at basically how many stocks the fund has and how does it compare with the trading volume of each of those stocks in the market. The rankings that we publish are on a scale of 1 to 5, rank 1 being the highest and rank 5 being the lowest in the ranking scale.
Interesting. Okay. And you assign weightages to each of the factors that you mentioned, the return being 55, volatility, etc., having a weightage. Now, Prableen, I'll come to you. Before we go into each of these categories, it's interesting because I've spoken to you over the years and you have a similar methodology that you follow. And I'm sure that you refer to reports like this. But would you like to also weigh in on how you approach ranking of mutual fund schemes when you go to a client? Of course, fitment is very important. It's not just the performance of a mutual fund scheme vis-a-vis its peers, but it's also fitment of the right mutual fund scheme with the approach that an investor should have. So what else, qualitative and quantitative, do you look at?
Okay, good afternoon, Alex. Absolutely, I think we do refer to reports such as CRISIL, then Morningstar is there, Value Research is there. Now we have list by Money Control as well, and all of them have their own methodologies. And a couple of factors there, the filters are actually overlapping as well, because of course, performance is one of the common things that all these reports analyze and we do ourselves. Within performance, CRISIL is looking at the mean returns, and we prefer to look at rolling returns. But for that, the restriction is that you should have a longish time period. And along with the rolling returns, I also like to take a look at the trailing as well as the calendar year returns, because Alex, that enables us to understand, why in a particular year a scheme is not performing. For example, in one of the the categories which CRISIL has given, a fund did not perform in 2020 at all. In 2021 onwards, it's picked up. So, looking at the calendar year returns, I think also helps us decide. Along with that, I think once we mix trailing, calendar and rolling returns, Sortino ratio, I think, is one of the good measures to check the downside risk. So of course, volatility is there, and volatility is not always bad. So upside volatility is fine. So we try and concentrate on how much is the downside volatility. AUM, we look at more than 100 crores. Other than that, I think conversations with AMCs, understanding their approach to investing is equally important. And that is more of a subjective sort of a filter which we apply. But I think that plays its own role. So I think cumulative with all of these, different criteria that these reports and these platforms give us, along with our little filters, we are able to, derive a decent list of funds, I think, which we find. It's like a bucket that you create and you can keep picking from that.
Absolutely. And what I'm also taking from this is that there are a lot of minuscule things that come together to make a larger picture that help you make the right decisions. And I'm talking about both you, Piyush, as well as Prableen. Piyush, I'll come back to you and we'll break it down now into the categories that we've decided to speak about, which is flexi cap, mid cap, and small cap. Let's start with the flexi cap category. And understandably, this category gets a lot of focus because it's ability to maneuver based on market trends. It has the ability to focus on any category of market capitalization based on where the fund manager sees value, if that is indeed the approach. I'll come to you about the key trends that you're picking up in the quarter gone by, though. What are your key findings?
Yeah, so looking at the flexi cap category, if I were to look at the ranking trend that we have published over a period of time, there is a fair bit of stability that we see when we look at the latest rankings vis-a-vis the earlier quarters. For instance, 16 funds out of 22 funds that have been ranked in this category have maintained the same rank in the last 2 trailing quarters. Further, if I were to compare the latest quarter ranking vis-a-vis, say, 1 year back in, say, March 2022, 8 out of 22 funds have got the same ranking. So at an overall level, the rankings haven't changed much over the last few quarters. There are 3 funds where we have seen ranking changes of more than 2 notches. Like I mentioned, we are ranking them on a scale of 1 to 5. So, for example, HDFC Flexi Cap, it was ranked 3 last year in March 2022. In the last 1 year, it has gradually moved up to rank 1. Then the other fund, IDBI Flexi Cap and Axis Flexi Cap, they have seen a decline in the ranking. So IDBI was ranked 1 last year. It has gradually gone down to 2 and now it is ranked 3. Axis Flexi Cap again used to be ranked 3 in the last 1 year back. In the last couple of quarters, it continues to remain in rank 5, which is the lowest in the entire ranking universe.
Okay. Prableen, I'll come to you because, again, this is something that you study. You zoom out a little bit more, I would think, because that is this one. Our expectation is that people don't generally make the shift every quarter if there is an underperformance, but this kind of helps you make a judgment over a period of time. So what are your own readings in the flexi cap space? And eventually, I would also like to ask you about when do you draw that line and you say that, okay, this particular fund is not working for me, and what helps you make that decision? But for now, let's focus on flexi cap.
So within FlexiCap, HDFC FlexiCap is topping, and performance, Alex, definitely depends on the style of the fund. So FlexiCap typically from HDFC followed more of a value style, and it was the second worst performer in 2020, calendar year 2020, with 7% returns. And at that time, the better funds were actually giving more than 30% returns. So, now 21 onwards, it's of course moved up in its ranking, and 22, it's been topping. PPFAS was negative last year, and it's back. And PPFAS is not actually considered in the CRISIL report because of its allocations outside India. But I think it's a good flexi cap, and of course, we include it in our list. Likewise, I feel some of the funds which are mentioned here, Kotak Flexi Cap, UTI, even SBI, I think, they have been pretty consistent performers. They may not be ranking in the, the number 1 or number 2 spots currently, but I feel over a period of time, they have generated decent wealth. And, there are reasons why the performance is not there. For example, Kotak it's a huge AUM now. It's a growth style fund. And of course, it's been sluggish in its performance, in the last 1.5 years, if we see. There are different aspects why funds don't perform. And that is why when we are looking at portfolios for our clients, I think the decisions are never made on a quarter, 1 or 2 quarter basis. I feel that there is a need for churn. If something is underperforming its category average as well as the benchmark over 5 to 6 quarters, I think that is definitely a red flag, Alex. And I think as a retail investor, this is something a person, even a do-it-yourself investor, can follow. That please check what is the category average and the benchmark. And if you feel that there is consistent underperformance in the scheme, maybe then a bit of deep dive is required to understand what is the reason. But I guess if we would have told somebody in 2020 that please invest in HDFC FlexiCap, probably they would have said that, oh, it's like it's showing such bad returns. Why should we invest? So I think there's seasonality in funds. We need to understand what is the style of investment. And I think that is how, a healthy portfolio is created with a mix of all these strategies.
Absolutely. Couldn't have said it better. And I think you answered the question that I intended to ask you later, but that's perfectly fine. That sets the context. Let's move to the mid-cap strategy next. And I'm actually quite curious about what Piyush's readings are from here. Piyush?
Yeah, so on a mid-cap category, like we discussed earlier, FlexiCap had a bit of stability when it comes to ranking trend. And like Prableen mentioned, we need to look at fund performance over a period of time. So in a way, rankings also, when you look at the rankings over a period of time, there is a stability in a particular cluster that gives you a sense in terms of how the performances are trending. On the mid-cap front, again, I would say at an overall level, there are not many changes in terms of ranking. 19 out of 24 funds retain their rank. So only 5 funds which have seen a change of rank in the last 2 quarters. And even over a 1-year period, almost 40% of the funds have retained their ranks compared to the 1-year back ranking. There are only 2 funds which have seen more than 2 notches movement. One is the Motilal Oswal fund and second is the HDFC Midcap fund. Both of them have seen an improvement in the ranking. Motilal was ranked 3 last year in March 2022. It has come up in the ranking over the last 1 year and is ranked 1 in the latest quarter. HDFC again, it was ranked 4 last year. It has seen improvement in the ranking. Now it is ranked 2. And again, factors that Prableen spoke about earlier in terms of value investing, some of the exposures in the banking sector and PSU have helped these, especially the HDFC Midcap Fund, in improving its performance and thereby improvement in the ranking.
Interesting. I'm curious about what you have to say as well, Prableen, because and the reason why I wanted to choose mid-cap as well as small cap is particularly when we're talking about active style of fund management. This is the true test of a fund manager's skill, right? One would argue that the large cap category, now there's a very strong case to choose passive because of the kind of underperformance of active. But here we've seen the opposite happening, where you still see significant outperformance possible. So what's your reading of the mid-cap space?
So if we look at just the calendar year returns from 2014 to 22, Alex, for the direct schemes, it's interesting that none of the toppers has ever topped again. So 2014, I think it was some scheme by UTI. The next year it was the other scheme. So none has actually been able to reach the top slot in the next year. So it's a huge divergence. And what, I'll give you a non-finance example for this. So as a planner, as an advisor, what I would like is that, okay, fine, maybe the kid is not topping every year, but the kid is in the top 5 in the class. As a parent, what you want, I think similar with your fund. You want more consistency, that it's fine you retain the, rank in the top quartile. I think that's good. And currently, I think the top 2 rankers in the CRISIL report, Motilal and Quant, of course, Quant has done exceptionally well, I think, across different categories of, the different approach that they have. Motilal, I think, As per our readings and the filters that we apply, I would not rate it at the top slot. My personal choices here would be based on our criteria, our Kotak Emerging, PGIM, SBI. I would rate them above Motilal for simple reasons of consistency in returns. So I think overall, it's a good way that every quarter you look at how the rankings change. But again, it is over a period of time because equity investing is for the longest time period. And I think, your actual worth can be proved during different market cycles only, Alex, that you're looking at times when interest rates are going up as well as coming down, different sort of market crises as well as, run in the markets. So over different time phases, I think the real test of these schemes, they're able to give that. And I think then the decision made is much better.
Absolutely. And this is evident, I think, so far in the rankings that we've seen as well, with especially in the flexi cap space, as Piyush pointed out, the winners of last year are clearly not performing this year and vice versa. But let's talk about the last category, Piyush. What has stood out on the small cap side?
Yeah. So small cap, unlike flexi cap and mid cap, we have seen higher number of changes in terms of the ranking. For instance, in the latest quarter, when we compare it with the previous quarter, there were only 9 funds which had the same rank versus the previous quarter. These are 9 out of 21 funds that we are talking about. Also, if I were to talk about the major changes, Tata Small Cap has seen an improvement in the ranking by 2 notches. It has moved up from rank 4 last year. It had improved to rank 1. Now it is rank 2. HDFC Small Cap again has seen an improvement, just like mid cap and the other categories that we were talking about. It has gone up from rank 5 to rank 2 over the last 1 year period. Franklin Smaller Cap Companies Fund, again, that's a fund which has seen an improvement in the ranking from 4 to 2. Besides this, Bank of India Small Cap Fund has seen a decline in performance, and which has got translated into decline in the ranking from 1 to 2. Now it is rank 3. And in terms of the top rank funds, Quant again in this category continues to rank 1, and it continues to remain rank 1 over the last 1 year, and so and so.
Okay, Prableen, key thoughts on small cap, and then I want to come back to you on another question with regard to construction of portfolio.
So small caps, I think, Alex, Quant actually has topped in the last 3 years, on even calendar year basis. It has been able to, give good returns. Nippon, I think, is a huge fund in terms of AUM, but I think still a very good, consistent performer. They really don't hold cash. They are holding large caps to manage that. They look at growth at reasonable price. So it's a good, robust framework that they follow. Within the category, I think HDFC Small Cap is another good fund wherein they are truly a small cap with, 80 and 80% above allocation to small cap. I think SBI Small Cap has been a consistent performer. Franklin has been good. So all of them, I think Axis has done well. All of them, I think, have been good in terms of consistency. And of course, they have their own periods where performance is not really showing. And that is why one has to stay put and stick to the conviction. But Alex, at the same time, one should not ignore the underperformance as well, consistent underperformance as well. And one must know as to why are you sticking to a fund even in times when it's not performing. So I think with that clarity, the doubt will never emerge and one would not chase the best performing fund.
Yeah, I think that is the primary purpose of having this conversation as well, because you've also described why there are periods of underperformance and why maybe there is a change in the ranking that we've seen. But I want to come back to you because we've discussed flexi cap, which I think a lot of people choose to include in their portfolio, as well as small cap and mid cap. But then what is the role, according to you, of these categories of mutual fund schemes? If somebody is listening in and if somebody has an allocation to their portfolio, they will be able to understand what role it's supposed to play and how you're supposed to decide where to place it in your portfolio.
So I think all these three are part of your core portfolio for especially investors who have a longish time horizon. Small cap, I will not include for somebody who's just looking to invest for 5 to 7 years. I think 7 plus more horizon is required for small caps. Mid caps, again, I think they act more like the protein, in your diet, which can give the boost. Likewise for small caps, flexi cap. Now, Alex, I think Piyush will also agree that the majority of them are more like large caps now, with almost 70% above allocations towards large caps. So the tilt is towards large caps, and that is why I think the performance difference is also there within the large caps. So you have to be sure if you have a large cap, there is probably no need to add a flexi cap now, pure flexi cap, because it would result, I think, in duplication of overlap of a lot of holdings. So, but still, I think even as a beginner, if you have a longish time horizon, these three categories alone, I think can actually, they are good enough to create a portfolio. And for mid caps, I'll add that I feel there is little room now created for even passive strategies within mid caps, because there are funds which are not able to beat the index. So I think mid cap 150 index will soon, I think, play a decent role for investors with, I would say, 15-20 year horizon, somebody who's investing today, so that the tendency to keep chasing the best performer is not there. So you can always create a core with a passive strategy there and add, of course, a small cap. And
that's a very interesting. That's a very interesting topic for another conversation, I think. But I would toss this to Piyush for closing comments, because this is indeed his report that we are discussing. In your opinion, how should an investor view this? We've discussed at the start of the conversation that this is a snapshot. And this is something that, by your own admission, changes very periodically based on the season, based on the management style of a particular fund. So what would you say that an investor should glean from this reading, from this ranking on a quarterly basis?
Yeah, I think one important thing is to look at what has been the consistency of ranking over a period of time. So if there is a fund which has been ranked even two, but it continues to remain in the second cluster over a period of time, that sort of indicates the consistency of performance that the fund has generated. Second is, if the fund comes up in the top rank, but it doesn't sustain for a long period of time, and also it's also a reflection of the markets and the style that the fund manages. For example, we have seen in the past, like Axis was the top of the charts, even in the ranking. They fell down primarily because of the style, and HDFC, which follows a typical value strategy, has come up in the ranking in a given period of time. So it needs to be, the rankings needs to be looked at along with how the markets are, where the markets are positioned, and also the consistency of performance that eventually gets reflected even in these rankings.
Absolutely. I think that more or less covers the conversation for the day. Prableen as well as Piyush, thank you so much for taking the time. Pleasure speaking with you. And viewers, I hope this conversation has helped you understand better how to plan your investments. And well, you can write to us and tell us what you think about it. Do stay tuned. Lots more coming up over the course of the day. This is BQ Prime.